Yeah, wow. IVVD up 24%. Geez. A lot of the really speculative stuff is kind of traded down a little bit. Strategy's down, but the real companies seem to be up, like NVIDIA and PayPal and others. So I looked at Vertex. I like it. I mean, I think it's a decent long. It's doesn't have that much upside, but I think you can still get some of these pain drugs to work in the long run. Their first CF drug didn't work that great. Small position, XYZ. Don't know a lot about a firm, to be honest. Pharma's not getting hammered. Pharma's up. Almost every pharma stock is up. It was down earlier, but Trump had a very conciliatory tone to pharma. GCT, that's 𝗥𝗢𝗘𝗢. That's such a weird company. A firm, I'll look at. Axon Enterprise, that's Taser. ARQT, Arcutis, I can look at that pretty easily. And then Niveus. I like Dawn. I have in this portfolio, I have a decent sized position, but nothing compared to D-Wave. Yeah, sort of same, like 5% of the portfolio, like maximum size for a short, but D-Wave I supersized foolishly. Yeah, of course, I'm sure. I just said it. I'm sure Rigetti, IonQ, QUBT, they're all like 5% each, and then D-Wave's 30%. Yeah, Chegg numbers are good, man. I really don't want to. It's like that stock that keeps taunting you and bringing you back. I'm like, I really don't want to deal with Chegg. I just want to write it off and never look at it again. But Chegg I made money in Q1, man. I would take over Chegg, but these types of people that run publicly traded companies they're almost all in it for themselves. Like the idea of whether or not it's like going to be a good company or a good stock is so secondary. Yeah, all those stocks, Dave, SoFi, New, they all went crazy. Fartcoin down is a sign. It's barely down. Fartcoin down is a sign. It's extreme financial stress in the system. So anyway, Vertex, 14th biggest drug company. I get fair value around like 600, which is one of the highest. Well, we've been working on Godel for, I want to say, a year. So it's still a little early compared to Bloomberg, but, you know, because I made it with all my tender love and care, you know, I think it's pretty good. You know, it's still younger than Bloomberg, which has been around 40 years. And I think it's going to be the pain franchise. I don't think it's going to be a specific pain drug. What LLM thinks quantum is along? I have to have a talk with that LLM. I have to have a talk with their programmers. It's the sodium nav. Okay, so it's nav 1.8 and 1.7. And it could be next generation versions as well. So look at cystic, right? They're saying the most potent cystic drug they have, they're just testing now. They've been selling cystic fibrosis drugs for more than 10 years. So I think, you know, you can get combinations. You can get, you know, Sarepta is trading for, I want to say, less than 2 times revenue. And these are for biotech products that are very high margin. And they have a big pipeline. So it's like pretty attractive. I'm not a big fan of Kathy's investing, but I like her as a person. And, you know, I don't think there's anything wrong with her. Yeah, you can't do embryo screening for DMD. Yeah, it's still fairly rare to do it. No specific thoughts on SoftBank. Obviously, they're kind of like a high risk, high reward type organization. All right, let me look at this Arcutis, ARQT. This is a $1.7 billion company. Market cap is what all the shares are worth in combination or in sum. Enterprise value is the market cap adjusted for the cash holdings of the company. That's the way I like to look at it. The cash and debt holdings. In biotech, there's people down 80, 90% in biotech stocks and still believe in them. Biotech's a different space. One of the things I look at in biotech sometimes is paid in capital and accumulated deficit. If you guys watch my models closely, you'll see that I put those out a bit. All right, I start tracking those. And what's cool about this company or any biotech company is take a look at this. So this company was founded some years ago, and they've raised 1.3 billion. That's the paid in capital since they started, right? They raised 1.3 billion, and they've spent 1.1 billion. And the company is worth 1.6 billion. Is that good or bad? What do you guys think? Most companies are not even in this situation. Most companies are way worse. Yeah, it's not a good return. They spend money on their company. What do you think? It's the amount of money that's gone into the company. I just said accumulated deficit. It's the amount of money that they've lost from the capital they've raised. No buybacks or dividends. Just building the company. Most biotech is way worse because there's cash on the balance sheet. The difference is the cash on the balance sheet. Yeah, so I mean, one way to look at it is how much has been, what kind of rate of return you could have created. So we'll look at that maybe a minute. So they have approval of ZORV. I was going to say ZORV is a terrible name. You need a vowel or two, or usually you need a Y or like some kind of nice sound. ZORV would be like I'm going to call it ZORV anyway. Now, Roflumilast, which is the only drug that starts with ROFL, which is rolling on the floor laughing. I know that's a boomer abbreviation. This was a asthma drug, and they got Roflumilast for topical. Yeah, 1.6 billion. So would they get it for psoriasis? Oh man, there's so many psoriasis drugs. I think we can get 70 out of Sarepta conservatively. I bet you we can get 100 if we're a little lucky and things go our way, especially something on the pipeline. I assume that pipeline's worth nothing, and they just wrote a big check to Arrowhead for their pipeline. Basically bought Arrowhead. Yeah, I think we can get 100. It was 100 a while back, and it was 130. So nothing's changed on the FDA front. I think the execution is maybe a little sloppy, but the pipeline's gotten better. I haven't looked at it too closely, to be honest. Yeah, it sounds about right, MS. I do think Akira will be bought out. Yeah, earnings were bad, but I kind of believe what the company's saying. You know, they had the patient death. I think it'll be the rearview mirror over time. Umar, you're talking about just the lack of clinical evidence for their drugs. PRVs was one of my main business models. Sometimes being bought out is a good thing for shareholders. Sometimes it isn't. No, I mean, I bought it at 50 because I believed in that upside as well. I don't think I'm going to listen to AST. We were going to listen to Rigetti. We can look at the AST numbers. Yeah, hopefully it's a hiccup, but it's not. It's priced such that even if it's not a hiccup, you still can get some good upside. Okay, so there's cream and there's foam. They got two separate things. Now, so you can't really do a return analysis on this because you don't know when the capital was raised, right? So here's one time, 2420, they raised 167.2. But that was just, that wasn't that recently. It's 5 years ago. So like theoretically, a management team, right, could have, management team made 15%, for 5 years, that 167 would be worth 336, because whether it's capital you put in a drug business or capital you put in a stock, it shouldn't make a difference, right? Maybe you and I could make 15% trading that 167 million. So did this Arcutis company, they could have put their money in a fund or a stock instead, right? So they did another offering. Also, remarkably, this was their IPO. Oh, that's wild. Okay. And these were the follow-ons. So they did one in October, February next year, August of the next year. It is 93.4, 2075, 161.6. Okay, so here's their schedule of when they raise money. It looks like they raised 300 prior to being public too, but I could be off on that. But in any event, you can kind of do the math on each tranche of capital they raised. And if you do that, the 810 they raised, to say nothing of the 310, would have been worth 1.3. So it looks like they sort of have returned 15% a year on the capital. Because if you just look at this paid in capital or accumulated deficit, you think all that capital was a long time ago, but it was actually all really pretty recently. But if you assume the 300 million was raised 6 years ago, then you could argue they raised 1.1, and they would have an EV of 2 billion if they did 15% a year. So they probably did a little less than that. But I don't know if you should buy index funds or not, but certainly that's the popular choice. I think you should just work on your job, work on your making even more money. If you have so much money you don't even know what to do with it, I mean, you could always buy stuff in the industry that you do know. Buy some real estate, buy some industry just to live in, and then buy some whatever your field is. If you're a doctor, you can buy out practices. If you're in entertainment, you could start a production company. I mean, there's always, sort of your expertise is really important. Don't know Tola Capital. Rings a bell, but I don't think I know that. Okay. So Roflumilast is an old drug. So that's pretty important because you can make it's not a biological, by the way, but you can make dermatological generics. I do want to remind you, I made 24x from September to January. I don't know if you remember that. So being down 17% is, it's okay. Roflumilast's patent is expired. Roflumilast was discovered in 25 years ago. It's patents. Well, sorry you didn't get Cassavo, Ben. Did you do Invivid? Invivid's up 25% just today. Did you do PayPal? You can have a drawdown. You're allowed to have a drawdown. Do Amex? Jeez. Wow, Mustafa. I don't know if you know this, but when it comes time for me to pay capital gains taxes, I put in all my gains and losses. I don't know what you do. And yeah, the gains justify the losses. You have to be willing to take losses if you want big gains, because otherwise you're basically saying you know how to value the market and you know how to time the market, which is kind of, my portfolio isn't even down after you put back the craziness of D-Wave. So it's just that one trade I supersized. So nobody who's following me should be down, unless you supersize D-Wave with me, in which case it is what it is. I think I've done pretty well, but I don't think we've been wrong on quantum yet. Quantum is just a bubble waiting to be popped. I remember my big short way back when I challenged Matt Kors to a competition with Sega. Do you guys remember that? This is the monkeypox. Oh man, this was funny. The big monkeypox rally. I just gotten out of jail, basically. This is what, as you guys can see, this is what I do. I pop bubbles. What are you talking about? Matt lost all his money and also want to continue the competition, but I did great. You don't even know what that word means, blow up. But yeah, this is what I do to stocks, baby. D-Wave's about to break out. Oh man! Why did you tell me that? Guess I gotta cover it and go long. All I remember is he lost all his money and he quit. What happened after that? I don't know. I do remember doing a 24x in 4 months for you guys. I do remember doing that on YouTube. That was pretty sick. Oh man, the breakout setup. What part of business school they teach you about breakout setups? I must have missed that class. This class is a breakout setup. This is, you buy these charts. I mean, this was a breakout setup. Seika was doing great. Look at that, going up on higher volume. Seika was killing it. With the Shkreli technical analysis, I don't know if you guys know this. Watch this. Here's the amazing thing about Shkreli technical analysis. I don't even show you guys how to do this. I think the stocks move based on earnings, which yes, they do teach you a little bit of earnings in school. Okay, here's my chart analysis, guys. As you can see, there's accumulation. A breakout's going to happen soon. So here, needless to say, I would have, that's way too big. I would have bought right here, right? Once this support level was bounced off of, it absolutely was going to confirm and go up, right? Even though this was a fake fraudulent company, I went long, okay? And then you could see the breakout had clearly an uptrend here, and then I stayed long. And I was expecting what happened here once I saw this volume, gap up, bingo. Bingo. And then here, I knew that this was the top. Why? Volume dried up. Once volume dries up, I went from buy to sell. I sold everything. Did I even cover here for this small amount? Yes, I did. Watch. Watch this, ASW. Look at this. Just for this little blip, I got out of my massive short, which I needed huge liquidity to. I covered, went long, and then sold up here, and then shorted again. That's right. I did. And then finally it dropped. I covered right here just because I didn't want to lose my cost of capital, right? So I covered right here and I shorted over here. Why? You might say, why would you do that, Shkreli? I didn't want to waste 2 months where my money wasn't going to do anything because I could see the future. So I went back into the short, covered here, of course went long, shorted this little peak. Did I cover here? I don't think so. I actually just let it ride. I went crazy. I let it ride. Covered everything here. Went and I bought about 600,000 shares, rolled this little thing, sold, shorted. I mean, technical analysis is easy. I love it. You know, all this computer programming I'm doing, why would I do that when I could just, why would I program a system to look for really obscure, hard to find signals with huge computing power when I could just look at the charts and draw some, hold on, anyone have some crayons? We've got some crayons. Let me get some crayons and some rulers. The real trade was, this is how it actually happens in real life. I saw this pump, I shorted a little bit. I saw it pump some more, I shorted more. I saw it pump and I shorted more. I covered a little bit, I covered more, and I got out. That was it. Not too much technical analysis going on Wall Street, buddy. Let me see. Let me check my list here of fund managers. The last guy I know to do technical analysis well was Monroe Trout. Okay, biggest hedge funds in the world. Skipping Berkshire for a second, because Warren Buffett is the greatest investor of all time, but he says technical analysis is for idiots. So I don't know if you think Warren Buffett, knows anything, but that's up to you. So Bridgewater, they don't do technical analysis. They're more quantitative. Let's skip Man because they're an unusual structure. Elliott is a value investor. Doesn't do that. So this is the people with the most money, right? Which is what I want. Millennium, never met anybody from there that did technical analysis. Same thing with Citadel. TCI, he's a value guy. Two Sigma's a quant shop, so is D.E. Shaw. Fairlawn, value shop, sorry. Renaissance AQR, both high frequency trading. 0.72, now there I'll tell you, Steve Cohen was a fan of technical analysis, but Steve Cohen kind of retired and stopped trading, and I'm not sure he thinks it works anymore. So he did that in the 70s. Marshall Wace, no, sorry. Cube, Susquehanna, Jane Street, all quants. Valpost, value. Graham, quant. So it seems like you got three choices to succeed in investing. You could be a quant, you could be a value guy, or you can run a pod shop. Algos are grown-up technical analysis. TA for grown-ups. You don't have to follow a trend. You want to do strategies that other people aren't doing. But the trend is hard to interpret, from a fractal perspective when the trend stops. Like I said, which trend? The trend stops and you look at this. I mean, the trend is up and all of a sudden the trend broke. So when do you buy this breakout and then you got to sell the breakdown. It's just self-fulfilling prophecy. Yeah, I don't think you can 500 samples over 10 years that's perfect. My friend had dinner. My friend's named Pablo. Pablo had dinner with Buffett. I had pictures from the dinner. He asked him if, let me see if I could find him on Facebook. Well, anyway, my buddy asked if Buffett cared or looked at other investors at all. He said no, it didn't make a difference. He didn't care whether or not other traders made money with their strategy or his. Here it is. There's Warren in Omaha. There's my friend Pedro. Nobody else talked either, by the way. It was just Pedro just nonstop talking for like 3 hours. And Buffett, he did a talk at University of Oklahoma or something, or Nebraska, I should say, Nebraska U. He was basically just like, oh, what are you guys doing later? Come by the steakhouse. We can continue the conversation there. And so in any event, he just said he was like, oh, what do you think of Renaissance? What do you think of Soros? What do you think of this, et cetera, et cetera. He's like, look, I'm sure they're all super smart people. And I'm sure some of them have done even better than me, but I'm comfortable with the way I invest. And that's it. I always messed it up, TK. It's Pedro Machado. He runs a fund in Brazil. I always call Pedro and Pablo the same name. So, you don't need, your strategy and my strategy don't have to be the same. Buffett's strategy is he's never looked at a chart in his life. I think that the Japanese trade he did was pretty good. You're buying it over 12 or are you long it now? Big difference. Sounds like maybe you were long it earlier and it's breaking down now. You got to get your stop loss out. So you're going to buy it 10% from now. Got it. What if I told you it's never going to happen? Markets change a lot. Even Ken Griffin said, the things I know about stocks stopped working in the 90s. Never say never, but I don't think it's going to get there. It's no good at 10. Only at 12 will have a confirmed breakout, and then it's going to go to 15. Buffett never just fundamentally got pharma because the patent expiries just kind of were very hard to analyze to him. It doesn't make sense. If it goes to 12, then you're bullish, but you're also saying it's dumb to short it now, which means you're also bullish now. You got a bad entry on that Epic. All of us got IBVD at like 50, 60 cents. I'm glad you're up. Kick it and double down on D-Wave. Epic's been having some bad luck. Worse than mine, it looks like. When you're ready to trade, let us know. 70 to 90% doesn't pay the bills. You're either in the trade or you're not. You think I don't know anything about technical analysis? I've invested in hundreds of traders, employed hundreds of them. Never once saw a TA guy make money. I know about it. I just know it's foolish. Quantitative investing is a lot. It makes a lot more sense than technical analysis. Why would you have a system that you can't computerize? You have a system for looking at charts, but you can't reduce it down to a computer? Just run a computer on the system. It's 100,000 times better. It doesn't make any sense. Why would you manually do it? You would find that you would not make money. Same thing happened to Buffett, Dusty. It was one of the first things he studied, and it took him about a month to realize it was, well, what does Buffett know? He should have done technical analysis. That's not how I interpret the charts. D-Wave has had 3 failed breakouts. It's the most bearish chart I've seen. 3 times the stock tried to rally, and all 3 times failed. If you're 80% right in trading, you're the richest trader who's ever lived by far. On Wall Street, the practice has basically all but been abandoned. It was people started to doubt it in the 70s. By the 80s, it was wishy-washy, but by the 90s, it was more or less dead. Since then, it's just dead. It's pretty hard to 10x your money, Joe. Millen, I think if you're only firing off 500 trades in 10 years, you're probably curve fitting. Did you come up with the algorithm a priori, or did you search for the algorithm? Usually the people who swear by technical analysis, they're actually very good traders, but they are doing something else, whether it's sentiment or something that's actually making them the money. They're just saying that TA is a part of their success. But look, anytime I pull up a chart, I kind of do my own mental study of it, think about it, but I can't say it's ever really helped me much. And private equity is, a situation where you have to buy the whole company, right? There's no more chart after you buy the whole company. So, in PE, that's it. You get one shot, you buy the whole company and you got to run it from there. You don't get to do anything else. There's no magic sauce to PE other than, there's plenty of bad PE firms. Just buy companies cheap, fix them up, and nothing you can't learn in business school. But, being a great manager takes a little bit of time, practice. A lot of it's in management, a lot of it's in purchase price. Any idiot can draw lines on a chart and press the buy button. If it worked, you could reduce it to a set of rules, put in a computer program and make a fortune. But unfortunately, it's not that easy. People have been doing that work for 30 years. What do you think of the Cassava chart? Take a look at Cassava's chart.